Hello traders, let's talk about NIO, the largest electric vehicle maker in the world, after EV frontrunner Tesla of course. The Chinese NIO has gained immense popularity from traders in 2022. The NIO stock is in fact the 12th most active stock across all US exchanges. That's right. The volume traded in NIO per day exceeds $33 million, with the average 3-month volume amounting to nearly $55 million. To give you an idea of scale, that's more trading activity than that of Snapchat, Intel, Bank of America, Nokia. I could go on and on. To say that it's a rising star would be an understatement. NIO's market capitalization is worth over $33 billion as of September of 2022. Unfortunately, NIO was swooped by the headwinds of this year, which hampered not only China's economy, but the world's macroeconomic sphere as a whole. Rising inflation, weak domestic data, and spiraling economic downturns have all slowed down the red-hot engine that is NIO. But the company remains a fan favorite. How did the pioneering car maker, which was founded less than 8 years ago, become so popular? NIO was founded in 2014 in Shanghai, China, centered around designing and manufacturing the affordable electric vehicles of the future. After its humble launch, a number of companies invested in the firm, including Lenovo, Tencent, and other Chinese behemoths. NIO's first car, the EP9, was launched the same day the company was founded. So, you can say that there has been a generous dedication of work, time, and innovation before the company was publicly founded, giving a whole new meaning to kickstarting a business. Over the following years, the company would leap through the stages of growth. In 2016, the California Department of Vehicles gave NIO permission to road test its vehicles, and 2 years later, the aspiring EV tycoon launched its first battery swap facility in Guangdong, China, under the name of Power Swap Station. In 2020, NIO announced a $1 billion funding from a group of new Chinese investors. The engines were piping hot for NIO in the second half of 2020, growing over 1,600% in the year, despite the first impending wave of COVID-19, which has shaken up global economies. Things took a halt in 2021, or more accurately, a slap to the face. Beijing's regulatory scrutiny on the tech sector and China's decision to cut subsidies on new energy vehicles by 30% created a recipe for disaster. NIO has failed to impress Wall Street analysts, investors, and institutions by delivering underwhelming results quarter after quarter. Fast forward to September of 2022, the infamous factors behind NIO's decay were exacerbated. The current year was expected to lighten up the mood, but instead was the bearer of bad news. Russia's invasion on Ukraine has further constrained energy resources across Europe, as the region's nations and the USA imposed sanctions on Russia, which disallowed the flow of resources from Russia to Europe. This led to nationwide consumer pricing pressures, which turned into global inflation. Hand in hand with China's lockdowns and underwhelming manufacturing activity, NIO's aspirations for growth were challenged time and time again. But Tesla's most prominent EV rival saw the brighter side of day once again in its most recent quarter. In the first quarter of the year ended March 31st, NIO has shined, surpassing Wall Street projections in several metrics, despite recording a loss of $281.2 million. Revenue generated was $1.56 billion, up 24% year on year, while net income and net profit margin also surged 70% and 63% year over year, respectively. NIO delivered almost 30% more cars than the previous quarter, but highlighted the obstacles and difficulties which created the recent turbulence. The company scrambled to keep pace with sky-high demand amid China's COVID-0 policy and the shutdowns which came with it. The Asian nation's strict pandemic measures dropped its gross domestic product by 2.6% in the 3 months ended June when compared to the previous fiscal quarter. Alongside macro-political factors, China's economic activity was deteriorating, and this can be reflected on the NIO stock chart powered by TradingView. Currently priced at $19.83 apiece, the NIO stock is trading on a neutral short-term trend but a negative long-term trajectory between a support area from $18 to $19 and two resistance levels by $24 and $35. The fundamentals and technicals are neutral, to be fair. Some aspects provided hints of growth, while others pointed to slowing business activity. To turn things around, NIO is endeavoring in multiple projects which could see it soar once again. First, NIO signed an agreement with the Hungarian government to set up a new battery swap station plant in the nation, which will be the first one outside of China. As said by the company, the plant will serve as the manufacturing, service, and R&D center for the brand's power products and services in Europe. Second, NIO aims to tap into the US market in 2025 and deploy the first battery swap station in the country as soon as November of this year. This will allow NIO to capture much more customers in an untapped market, which seek affordable, efficient, innovative, and environmentally friendly electric cars. Third, NIO would like to enter the German market, which is known for its highly competitive car industry. After entering Norway in 2021, NIO would like to officially arrive in Berlin, Germany on October 7th, and the EV firm will hold an event to meet the user advisory board members in Munich on September 9th to make this happen. Much is expected from NIO. The company is regarded as a future leader, with analysts believing that investors should purchase its stock if they seek long-term growth in their portfolios. The stock is indeed too attractive to ignore, with Goldman Sachs purchasing over 5 million NIO shares recently, and Deutsche Bank also estimating great things ahead from NIO with regards to EV sales and deliveries. The prosperity of the company depends on its innovation, consumer capturing initiatives, and business strategy. However, all of this is subject to impacts resulting from China's next steps. Light improvement was seen in Chinese manufacturing activity in August, and given the company's exciting expansion plans, NIO's success can be more noticeable in the coming months. Will NIO soar once again to the highs of early 2021, or will it fall behind Tesla, which has been doubling up on Chinese car sales? Share your opinion in the comments below, and do let us know which company you want us to explore next. Happy trading!